Hello, this is Mark Ellis, the trusted real estate advisor, and we are seeing the market shift. We've been experiencing the market shifting. It's just going in a different direction now. We were experiencing for many months and weeks mortgage rates just tickering down, and we're watching property values tick up over a period of time. And now we're experiencing mortgage rates ticking up, and it is impacting the refinance market. It is also impacting many buyers. So I'm going to break this video down into three sections. Number one will be market information. Number two will be tips that I have for buyers. And then number three will be tips that I have for sellers. All right, let's break it down. All right, so market information. I've addressed this before a few years ago when mortgage rates were going up, and here we are again. So there's just a cycle, you guys. The real estate markets have cycles, just like economies have cycles. This is nothing new. So I want to address a few things as it relates to the market. This is normal. We don't want to see appreciation that's moving too fast because that's not sustainable. We want a sustainable investment, right? Whether it be real estate or otherwise, we want steady growth and we want most of all sustainability. We are all invested in this country. We may have some investments in other countries, but we all want to see our economy doing well and our investments growing. Our seniors want to retire well. Our young folks want to be able to save and invest, and that's the cycle of life. So this is normal. Rates are increasing. Certain buyers will be impacted. They will have to lower their price point, which may mean that they won't be in neighborhoods that they want to be in, or they may need to put more money down, or they may need to pay off some other debts to adjust the debt to income ratio. So we may see some of these markets level off in terms of the appreciation cooling off. Are we going to see a market crash? Does this signal a market crash? I don't believe so, based on not just my own experience in the business since 2004, but also because of some very sound economists that I follow and looking at the nature of what have been the building blocks to the home prices that we've been seeing in the recent months and years. So it's normal for home prices to level off, and that's really what we want. So if you're considering selling, then this is a good time to sell, because I don't think we're going to see rapid appreciation when we see mortgage rates rising the way that they are right now. All right, my tips for home buyers. Here we go. I have three top tips for you. One is with rising interest rates, you have three options. You can lower your price point, or you can put more money down, or you can take some money and pay off some debts, wiping out some monthly payments on other debts that are showing up on the credit report, such as an auto loan. You'll wipe out that auto loan payment, and that can give you some better home loan options. So those are your three. Lower your price point, increase your down payment, or pay off some other debts. Talking with your real estate professional and your trusted lender, that's your team that's going to help you figure out what option is best for you, so you can go and continue to shop for homes and continue to get offers submitted and get an escrow and get your interest rate locked in. Now, talking about interest rates, in this market, I would suggest in the purchase agreement that there be a cap placed on how high of an interest rate you're willing to pay. That will protect you in the event that you need to cancel the deal. If interest rates rise higher than you can afford when it comes to the price that you've offered the seller, if the interest rates bump up, preventing you from being able to close the deal at that price point, you want a loan contingency that will protect you and allow you to cancel the deal. So for more information on that, reach out. I'll be glad to discuss what that means, but that's just another layer of protection for the buyers when they're submitting offers. Once your interest rate is locked, you're good. but you cannot lock an interest rate until you've opened escrow. So for more details or for your unique situation, give me a buzz. I'm happy to help. All right, for those that are looking to sell real estate, yes, now is a good time. I don't expect that we're going to see rapid appreciation throughout the rest of this year or even next year. Mortgage rates are rising, and it will have an impact on certain markets. Some of our most affluent and wealthiest of markets won't be impacted as much because those buyers, can definitely absorb the interest rate hits, but it still could cause them to scale back how much they're willing to offer. And then our neighborhoods at the lower price points, there's definitely going to be an impact there because some of those buyers just don't have enough capital to absorb these hits. And the truth is, we're seeing inflation across the board, right? We're all experiencing inflation in goods and services. And so we've been seeing inflation, if you will, with appreciation in real estate for quite some time now. And I think it's time for that to start cooling off. And you'll want to be very strategic about your list price and your marketing strategy. And you probably won't start seeing the crazy demand, right? And all the crazy terms where people are removing appraisal contingencies and giving you these crazy prices that are well above the recent sales in your neighborhood. I think we're going to see that cool off. So if you have questions, let's talk about the strategy that's going to work well to get your place sold for top dollar. We'll cash in on your equity, and we can talk about reinvesting that equity into other real estate, whether it be a primary residence or rental property. Maybe what you have to sell is rental property. You've been holding it for a while, and maybe you're ready to cash in on that equity. So we can talk about these things. You'll want to consult with a tax consultant to talk about any capital gains that may impact you tax-wise. And then talking to an estate planner, talking to a financial advisor when you're receiving a lump sum of money to figure out what your options are. All of that can be done with a consultation with me. Those professionals that I mentioned are in my network, and we can definitely help you with a plan that will make financial sense for you. So reach out. I'm glad to help. I'll talk to you soon.